Hello, everybody, and welcome back to another video. I'm Gav Blacksburg, aka Wolf Financial. I'm here with Evan from Stock Market News, and we're going to be talking about a really important topic, which is the investing advice that I wish I had in the beginning of my career. I have worked at firms like Goldman Sachs. I've helped manage several billion dollars across multiple firms, and I've made hundreds of mistakes. Let's start out with number one, when to sell. There's three reasons to sell stock. You met your goal, fundamentals changed, found a better opportunity. Stay away from the emotions. Some people think I got to sell because my neighbor told me to. I got to sell because I saw an article. Avoid emotions and stick to your goals. Understand the fundamentals. Any quick comments on this one,
Yeah,
Evan?
I think the biggest thing for me to add on this is, when you go into a trade or into an investment is to kind of have that plan of what you're looking for at the end. And it doesn't have to go exactly to that pathway, but if you change, I think as you said there, it should be for a logical reason and not an emotional one.
Number two is how long to hold. This is something that a lot of people don't understand when they first start investing, but the S&P 500 has never ever lost money in any 20-year period. What does this mean? Stop trying to time the market when it comes to investing. Understand time frame and how investing for the long term historically is proven to be beneficial. Number three, it's your time horizon. This is important. You only want to invest money that you can afford to lose. Why? Because if you lock up all your money and something does happen in the market and there's a drastic drop, how are you going to pay rent? How are you going to pay for food? General rule of thumb, if you don't need money for 10 plus years, it doesn't matter what the stock market does today. Get it into the stock market. If you need the money in the next 3 to 5 years, don't 100% invest it into stocks. You can use money market funds, real estate. There's a whole bunch of different pieces.
Going over to the next one, though, I think starting early is a really great one as well. Money compounding over time, the more time it's in there, the more time it's going to compound and keep growing and keep building on itself. Everyone kind of says, what do I need? How much do I need to get started investing? And the truth is, there's no minimum amount, fractional shares let you go in for whatever you want, but just the earlier you start, the more time your money is compounding, the greater the growth is going to be, the greater that interest is working for you.
Number five, though, investment style. Different styles work for different people. There is no one way that works for everyone. You can start out with something like index funds. If you want to go a little bit more advanced, there's individual stocks. And then within that, there's different types. There's day trading, there's swing trading, there's long-term holds, different styles. You got to figure out what works for you. The goal, though, is to not have to lose a bunch of money to find it. Number six, understanding your investments. If you're going to invest in an individual stock, you better know that business. You better understand the governance, the fundamentals, the technicals. Roll through their balance sheet, their income statement, their cash flow. Just know what you're buying. You don't just want to throw money at something because someone else told you to. Can you relate to that, Evan?
And the one thing that I'd want to add on top of it is also taxes. Taxes is something that not a lot of people go in and consider, especially when they get started investing. And if you can understand your tax implications and ways you can get that down, I think that could be a really great way you can extend this and make more money in the long term. But I 100% agree with this. And then moving over to the next one, number seven, price isn't everything. Price can tell you a lot, but if you are on social media, you could see a stock goes up 20%, and then after that, everyone is bullish. And then the stock goes down 20%, and then after it's down 20%, they're bearish. I think this goes into the underlying of everything we've been talking about above, and not having price be the reason you get in, but the underlying fundamental reason or case that you can kind of base that off of and judge, is it doing good? Are we continuing? Is this what I want to see in the long term?
Coming into number eight, imagine how much money you would be making if you invested in things that you use every day. Apple, Google, Amazon, right? We've been using these things for years and years and years, and the stocks have just kept going up. Look at what you're investing, what you're using, and invest in some of those. Number nine, this is key. Understand the financials. Investing in companies you use is a great beginning way, but you got to sort through them. So actually starting to understand financials, things like free cash flow, and of course, number 10, the best investment of all is sometimes one that you already own. And this is a hard concept for people to sometimes understand. Let's say you got into Tesla several years ago, you went up 200% on the stock, and you said to yourself, I'm already up a couple 100%. I can't imagine adding to this. That does not have to be the way it is. Sometimes there's more room. Take a look through your own portfolio and make sure that you're not missing opportunities to add to right in there. Make sure that you subscribe to the channel that you're watching this on. If you want more great ideas and education around finance, go ahead and hit the subscribe and like buttons.